Hey everyone, Brian from Bear Bull Traders here. It is Sunday, February 3rd. We're into February already, and just going to take a look at the markets here and take a look at the week that was, look ahead like we usually do, and let's start out by looking at market internals. Again, this week they seem to improve a little bit. Number of stocks trading over their 200-day moving average. We're now up around 33. I think last week we were around 28. So that's improving. Above the 50-day, we're at 76 now, and I think it was 70 last week. So market internals are improving, and the pain trade continues to be higher. People that thought they were going to short into some areas of that were going to be, everyone thought was going to be resistance, but market just keeps creeping higher. So let's take a look at the sectors here. 1 week performance: consumer goods, industrial goods, base materials. Well, building materials and industrials seem to be doing well. Technology lagging a bit. Healthcare, utilities still middle of the pack here. Financials still lagging. It's been the story of the financials for as long as, at least a year. The financials seem to be lagging, although they kind of had their day when all the financials reported about a week ago, and now they're in the middle of the pack here for monthly performance. But yeah, anyway, so that's kind of the way the market looks. I still think we're probably going to creep higher unless we get some really negative news about something or other, like the trade talks, or possibly some comment from the Fed that indicates they're maybe going to change their tack again and start tightening and reducing their balance sheet. But it seems like they're on hold for now. So the Fed put, as they say, keeping the market in play. So let's take a look at this bi-weekly. Just kind of use this as a proxy for the overall market, so we keep the video short. Again, here we kind of punched through these levels that looked like they were prior support, were going to be resistance, and moved above that. And like I said, so-called pain trade could continue to be higher this week. So we had, you can see we have a bit of an engulfing candle here. You look at this as the body of this candle, and then pretty significant engulfing candle higher. Okay, volume, it was all right. Let's take a look at the weekly or the daily SPY. You can see here we came up on Friday. It was kind of an indecision day. Not much volume, but really we kind of finished flat on the day, so a bit of a spinning top there. So we may we may end up with a pullback on Monday. You see we had a spinning top here, and then we get a pullback, and then we just keep going higher. So like I said, keep saying the pain trade. Pullbacks seem to be getting bought right now. So let's take a look at some of our trades are somewhat dependent on the strength of the U.S. dollar, and this is the U.S. dollar index ETF UUP. Kind of watch, and you can see here on the weekly, it is right at a level of support here, and it'll help our trades on the gold stocks if the dollar continues to weaken, because that will further push the gold price higher. As well as maybe some emerging markets as well. So let's take a look at gold for the week. You can see we had a great week on gold. Our nugget position still looking good, although it looks pretty extended, and we're up into this area of resistance here. I wouldn't be surprised if we do get a bit of a pullback on gold. Let's take a look at the daily. We are getting a bit of a pullback here already. And yeah, so I would, we're not going to go straight up forever, and we had a great run this week, and so I'm just thinking we are definitely due for a pullback. Here's Nugget, this is the position we're in now, and yeah, I got involved back here, and we've been moving higher ever since. So I'm still got a position in gold, and you can kind of see here on the daily. We did get a bit of a pullback, a bit of an indecision candle here. We did get a significant pullback back to 20, and then we just came back up and finished close to 21. So there was definitely some buyers in there when the price dropped back down, which is a real positive sign. So I'm just going to hang on to this position, what I have left of it, because I did scale out of a little bit of it, took some money off the table, and it's going to be a green trade for me for sure. I'm not going to let it slide back. So let's take a look at another one we're in right now. KOLD, this is the inverse of natural gas price, and natural gas pricing has been dropping. Thursday, the inventory number came out, and with all the cold weather in the U.S., you could have logicked yourself into thinking that the price of natural gas was going to go higher, but actually Thursday was a terrible day for price of natural gas. If you were a bull, it dropped even on probably some significant inventory draws. So, I think that KOLD, or if you want to play DGAS, which is, I don't know if people are in that. That was another suggestion for a long trade. But DGAS much more volatile than KOLD. You don't have the leverage with this ETF, so you don't have the gains, but you don't have the significant losses if price turns against you. So that's why I took this trade, and I think it continues to go higher. Because I think the price of natural gas is going to continue to weaken. So let's take a look at what other stocks are doing well. Some of the semis are doing really well. We had earnings from the Xilinx and MU. We'll talk about MU in a second, but you kind of see here the SMH, which is the semiconductor ETF, a semiconductor ETF. It looks like it really wants to go higher. This is a nice little bit of a flag here, and it's coming out of this flag, and it just looks like it wants to move higher. So you could look for a pullback on this and take an entry, or you could look at MU if you wanted to play stock specific. Here's a level here, sort of the 4150 level. Could be targeting as a point of sort of next resistance. If you can get an entry around 38.5, 39 on a pullback, you might be able to see like a 41 handle on it, or 41.5 without much effort. So something I'll be watching this week, MU. And MO, this was an entry tweeted out or sent out an email on Friday. Took an entry here, 49.10. Kind of thought it looked like it was going to do a bit of a reversal here. It might be early, and it might continue higher. But I was looking at this level of prior resistance and thinking maybe it's going to get back down to this 47.50 level. If we can get a pullback to there, but we'll have to see how it trades on Monday morning. Hopefully, we'll get a pullback, and it might take some off at the sort of 48 level, if I can get there, 48.20, just to get my 2 to 1, and then hold on to the rest and see if it can fail. So that's it, everybody. It's my book, How to Trade, How to Swing Trade. If you haven't checked it out, feel free to do that on Amazon. Otherwise, we'll see everybody in the Bear Bull trading room in the morning, Monday morning, bright and early. I know Andrew had a meetup down in LA. It looked like it was a really great time. Sorry I couldn't make that. But hope to make a few in the future, like the Arizona one, and I think there's one in Toronto coming up here shortly. So that's it, everybody. Have a great rest of the weekend, and we'll see you all Monday morning.